Yeah, welcome to this channel, and this is the product. I'll be taking you today on profit and loss, and it is a very good topic when it comes to entrepreneurs, business owners, and people who run enterprise. So I want you to kind of chill down and try to understand as much as you can understand. So this is just an introduction into what is profit and loss accounting, and also why do you need it for your business, why do you need to have it, why do you need to have an income statement in your enterprise. So this is just an introduction. Stay through and let us go through it. So if you have not liked the video, it's very good now that you try to like it, and let's move into it. So profit and loss, and it's as simple as we all know it. Profit is what you have after what you make from your business, and loss is what your business makes from you. It's so funny, but that's just as simple as it is. And when you're running on profit, it's you getting money from your business, you getting an increase into what you put into the business. And when you're making loss, it is the business giving you what is not up to what you're giving into the business. So let me kind of simplify it. The basic one that every one of us understand is that profit is you is what you get from when you make a sale, when you give out a service, and you remove the cost that it takes you to make that sales or bring that service out from it. So, and if you are not able to get as much as possible money that you put into it from it, then you're running on a loss. But I'm going to explain every one of them because they are actually components that make up this profit and loss statement. So what is profit and loss statement? Profit and loss statement is just like an income statement. It's a financial statement that summarizes your revenues, your costs, your expenses incurred on the business over a particular time frame, maybe monthly, maybe quarterly, even maybe weekly and yearly. It provides a snapshot of a company financial performance by showing whether it has generated a profit or incurred a loss during the reporting period. I kind of always tell people that it shows them the financial health of their business. Yes, if your business is doing well, you where you can get the most appropriate information or clear shot of it is actually from your profit and loss statement. And if it's not doing very well, same, you're going to get from it. It's going to tell you if you have to think through on your model, you have to think through on your business, or you just have to continue, or you have to change some things if it is working or if it is not working. Sometimes we kind of always do it in our head and say, oh, my business is growing, I should have make so amount, this is amount by this time. But with your profit and loss accounting statement, you don't actually need to feel. You'll be working with facts, you'll be working with what you currently have and what you currently how your business is currently doing. So the first component of your profit and loss statement accounting is the revenue, and revenue is just the total income earned from the business from its primary operation. Primary operations such as the sales of goods and services, and also let's say maybe the interest you get from royalties and from other sources of incomes that the business is running. So but it is actually mostly from the sales of goods and services. Maybe you're selling clothes, maybe you're running a graphics design agency. What your customer pays you, what your clients pays you and comes into the business, that is your revenue. So that is it. And also the second component is the cost of goods sold. When cost, and we kind of always call this cost price, cost of sales. That is, this is all direct cost associated with producing or purchasing goods or services sold by the business. So like let's say you sell clothes and you sell it for 4 naira, but you don't make it, you buy it from a market, maybe you buy it in wholesale for 3.5 naira, and now you're selling at 4 naira. So your cost of sales is actually the 3.5 naira that you bought it from the market, and your revenue is how much you're selling it, which is the 4 naira. Hope that's clear. So concerning the cost of sales might not be just the price that you bought it, might also be maybe the labor, the transportation, the logistics, the raw material that you use to make it, and all of them combined together. But what the business takes from you to make that product or to give that services is your costing. and what the product gives to you back after making the product or giving a service to the client is your revenue. So it is just like what comes in is the revenue, and what goes out of the business is the cost of sales. So then we have the gross profit. Gross profit is calculated by removing your cost of goods sold from your revenue. That is just like you subtracting your cost price from your revenue, from your sales price. So it is actually you getting what the core business what the core business activities is actually giving out. You get. So the operating expenses, apart from the cost of sales, also the operating expenses is what takes you into the day-to-day running of your operation, excluding the cost of the goods sold. Maybe the salary that you pay your staff, the rent, the utilities, the marketing expenses, depreciation, administrative cost that you run the business with. So it is not just that you only subtract the cost of goods from the revenue. You also have to look into the operating expenses, and also there's also operating income. And operating income is actually what most of us kind of um, call the net profit most of times. But if you are actually running maybe a big enterprise, that you don't just sit your profits there after the running of your business for the week, or running of your business from the month, and you get your profits. You don't just sit it in the bank. Let's say you kind of give it out for loan, you kind of put it into mutual funds, or your CFO, or maybe you kind of use it for some sort of investment. Also, that money can be bringing in some income. So it is actually known as operating profit. Operating income, the operating income is just you subtracting your operating expenses from your gross profit. So it's actually what most of us kind of call the net profit most of times. But the next one, which is the operating income and expenses, actually no operating income and expenses actually is what you have to remove again from the gross profit before you can have your net income. And this is it. Take those income as profits. So some of us sit our profit in the bank. Let's say after the month you make some few dollars, you make some few thousand errors or million errors. Some of us just sit it in the bank and say, okay, and business has made 50,000 naira in profit, and it's just there, and you're adding it over, and but that is not actually the best thing to do. You can maybe give it out as a loan and get interest from it, or maybe you can even put it in some mutual funds, use it as an investment. So what you get from this investment is your non-profit income, is your non-operating income, and some of it too can be expenses too. You get. So like, let's say your business borrow loan and you are paying some interest. This interest is also non-operating expenses. So you have to look into the non-operating income and the non-operating expenses and remove it from the operating income before you can get your net profits, which is your net income. So the net income is referred as the bottom line, that is the final figure of the profit and loss statement. And most of times it's actually when you have deducted all the expenses, taxes and interest from both the operating expenses and the non-operating items. So why do you need to do this profit and loss? Why is it crucial for your business? The first thing is that it's kind of help you evaluate your business performance. And profit and loss statement allows business to evaluate their financial performance over a specific period. You can be able to assess if you are actually growing, because you'll be able to compare what you have before to what you have now. You're going to be able to assess your growth and your efficiency. And another second important point is that it helps you identify your trends. That is, you'll be able to know the market condition, the customer preferences, the operational cost, and it gives you a very good clue into timely adjustment to these strategies. For example, let's say in your profit and loss statement, you discover that there is a specific product that is selling so high. It's showing that, wow, it means that customer kind of prefer this, or a product is not performing so well. You have been selling it for the last 3 months and it's not bringing up enough revenue for you to continue that product, which is going to be making your money sitting down, you can actually what stop that line of product and push the money into the one that is selling most. But if you are actually just selling all of these products and you're not having your recording, you're not populating your profit and loss accounting, you might not be able to see all of this. So it actually helps you to get identify trends, changes in market condition and customer preferences, and allows you to adjust to them. And also decision making. So with profit and loss accounting, you can be able to decide if you want to increase the price for this product. Let's say there's a lot of demand for this product, then that means that you can take the advantage of the demand to increase your profits, to increase your selling price. And also, let's say you just discover that you're not making enough, your bottom line is kind of small to what you're selling. Let's say you're making a ton of revenue of, let's say, 10 million naira, 20 million naira, and at the end of everything, when you're doing your bottom line calculation, you discover that you are only making, let's say, 10,000 naira, 20,000 naira net profit. That is so small. So from your profit and loss statement, you can be able to know if you have to start cutting your cost in your operations, and maybe you have to reduce some investments stuff that you're doing. So it's kind of help you make decisions. You are not just making decisions from what you feel, but you are making decisions from data, what is actually going on, and it's going to help you make sound financial choices. So the next one is that it's going to help you with your financial planning. That is your budgeting, your financial planning. You'll be able to set realistic goals, because you've, with your profit and loss accounting statements, you would have seen what you've done before. Then you can be able to predict what you're going to do now and what can happen in the future. So it's going to really help you to actually see what can work for you, and you'll be able to allocate resources effectively to it. And another most important one that people should, especially funders or entrepreneurs, that you're looking forward to get investors, get stakeholders to come into your business, is that your profit and loss is going to show them the financial health and the stability of your business. It's going to show them how profitable you are, how viable your business is, and it's going to help you. It's going to increase the confidence of your products, of your business. So it's not just going to be you're just going to tell them, we have been selling this for 2 years and we think we have made so amount. You have to be able to be sound with your figures. This is what we make last month, this is what we make last year, and this is our profit margin, this is our this is the gross profit, this is the net profit, and this is our loss. And it's kind of give you the confidence of knowing your figures. It's give you the confidence of you being stating your figures with enough clarity. So another thing is that tax compliance, and you'll be able to file your tax returns from your taxable income. And also performance measurements, you'll be able to measure your performance, the product, and know analyze how each product is performing and how each specific segment of the business is actually performing. You'll be able to get the areas that you need to strengthen, weaknesses, and also you'll be able to allocate resources accordingly. And also benchmarking, you'll be able to know how you're doing with other competitors in your business. And also cash flow management. This is another big thing, because sometimes you think because you're selling 10 million naira, 2 million naira, 20 million naira, 30 million naira in the month, that means that you have liquid. You might not have liquid, you might just be running your business in circles. So but if you are able to have your profit and loss statement accounting on ground, you'll be able to know how much you really have in the bank. You get, sometimes you look at your business and you discover that you're running your business in revenue of billions in a year. And when you actually check it, apart from the business money, the profit you're getting from the business is not even up to 2 million naira. How? It's because you have not looked into your profit and loss statement. You will be able to see the liquid that you have, and cash is king. With your cash, with your liquid, you can be able to know that, okay, you have the strength of moving into another investment plan, you have the strength of moving into another, maybe any opportunity that comes to you. And you will also be able to know how to manage everything very well. And the last thing is also strategic planning. You'll be able to know when to pivot if the business is doing well, when to change, when to launch new product, when to go into a new market, when the business it's moving, it has moved from the seed stage into the growth stage, and now it's time for you to scale up. It's going to help you to make strategic decisions and strategic planning on your business. So with this, you should be able to know that your business cannot run without a profit and loss statement. You might not be able to have the accounting skill of building the balance sheet, including the assets, the liabilities, and everything. But if you want to let your business run as profitable as possible, and you want to grow quickly and understand what is happening in your business, profit and loss statement is what you should go for at a start. That's the minimum criteria for your accounting. So that is the intro. In the next video, I'm going to be dropping you how you can create your profit and loss accounting statement with Excel. I'm going to show you from scratch, and if you're even a newbie, you're going to get it and you'll be able to apply it to your business. So stay true, and also don't forget to subscribe and keep on coming to the channel to get more business understanding for your business. Take care and bye.